What's up everyone, my name's Robbie, this is Robbie in Manila, and today we're talking about how to create a 3-fund portfolio with Charles Schwab. So you may or may not be familiar with a 3-fund portfolio, but think of it like a lazy portfolio. Of course it's not as lazy as just using one index fund that tracks the S&P 500 or the total market or something like that, but it's still pretty lazy because you're just using 3 funds. And so a 3-fund portfolio should allow you to accomplish some pretty important things. For one, it allows for diversification and asset allocation by allowing you to have money in funds that invest in both stocks and bonds. It's also a very cost-efficient way to create a portfolio because the expense ratios in the funds that you'll use are very low. It's also easy to set up, it's easy to track, so there's a lot of great benefits to having this type of portfolio. Okay, so when it comes to 3-fund portfolios, if you've looked at anything online, you've probably seen people talk about using Vanguard either as the funds, either as the index funds, ETFs, or as the broker to create a 3-fund portfolio. But you do not need to use Vanguard funds or Vanguard as your broker to create a great 3-fund portfolio. You can do it with Charles Schwab easily, and you can create a great 3-fund portfolio without using Vanguard. And so what we're doing in this video is we're talking about the index funds you'll need to use with Charles Schwab, or the ETFs you'll need to use, and how to do it with Charles Schwab as your broker. But if you don't have Charles Schwab as your broker, it's okay. You can still use these ETFs or index funds that are Charles Schwab ETFs and index funds if you have a Vanguard account or if you have a Fidelity account. So let's go ahead and roll this intro and figure out how to create this 3-fund portfolio. So let's go ahead and get started, but first, of course, please hit the like button. So the first thing you should know is that this 3-fund portfolio is not designed to try to beat the market. That's not its purpose. So the purpose of a 3-fund portfolio is really to get you proper risk-adjusted returns. So you should be able to add money into stocks and bonds to get a good return over time and take a proper amount of risk. So you're going to want to decide whether or not to go with ETFs or index funds when you create this portfolio. You can go with either of them. I'm going to show you both ways, but each of them have a little bit of an advantage or disadvantage. So for example, if you have Charles Schwab and you want an automatic investment plan, you're going to want to go with index funds because ETFs don't have the ability to invest automatically. So if you want to be able to take money out of your bank account and add it straight into your funds on a reoccurring basis, then you're going to want to go with index funds with Charles Schwab. And by the way, I made a video about index funds versus ETFs versus mutual funds, so take a look at that. I will put it right here if you want to watch that. So once you decide if you want index funds or ETFs, you're going to want to figure out your asset allocation. And so basically, this is how much stocks and how much bonds you're going to go with your portfolio. So an example of asset allocation is how much you want in stocks and how much you want in bonds. So for example, a lot of people go with an 80-20 portfolio. So if you go with 80% stocks, that's in the 80 part of the 80 portfolio, then the 20% is bonds. So an 80-20 portfolio, 80% stocks, 20% bonds. So back when I was a financial advisor, I used to help people figure out their asset allocation. So what we would do is we'd go through a questionnaire to help them figure it out. And you can do that too with the link below in the description, which will take you to a Charles Schwab Questionnaire. This is the investor profile questionnaire, and it's going to ask you a few questions. It's going to help you figure out your asset allocation. So these are some different questions on time horizon and risk tolerance, and then it's going to help you determine an investor profile. So you're either going to be conservative, moderately moderately aggressive, or aggressive. And at the bottom, it's going to actually show you the different allocations that you can use with these different risk profiles. Now here's the thing, this is not a 3-fund portfolio that Schwab is showing you, but we can kind of turn this into a 3-fund portfolio. What we'll do is we're going to take the cash and the bonds or fixed income, and we're going to add those together, and that's going to be just a bond portfolio. For example, this is showing 15% fixed income, 5% cash investments. So we're going to actually just say 20% of our portfolio is going to go into an aggregate bond portfolio. So don't worry about the cash or the fixed income, link them together, just put that into aggregate bonds. Next we have the large cap and small cap. So this is 45% large cap and this is 15% small cap. Now, this is a large cap stocks versus small cap stocks. But what we're going to do is we're going to actually lump these together into an aggregate stock portfolio or a stock index fund. So add 45 plus 15, that's going to give you 60%. So 60% of your portfolio would go into stock portfolio that invests domestically. Then the other 20% would go into an international stock portfolio that invests in international companies. And so this will help you figure out your asset allocation and how much you should put into domestic stocks, international stocks, and fixed income or bonds. So first, let's talk about the Charles Schwab Index Funds that we can add to this 3-fund portfolio. Okay, so here are the Charles Schwab Index Funds or ETFs that you can use. So first, we have the SWTSX for the Index Fund, which is the Charles Schwab Total Stock Market Index Fund with an expense ratio of only 0.03%. Now, if you want to go with the ETF, you're going to go with SCHB, the Schwab US Broad Market ETF, which is 0.03% expense ratio as well. Very low expense ratios. It's going to give you exposure to the broad stock market domestically in the United States. Next, we have some international exposure to stocks. So you'll have SWISX, which is the Schwab International Index Fund, 0.06% expense ratio, also very low. The equivalent ETF is SCHF, which is the Schwab International Equity ETF, also 0.06% expense ratio. Something important to know about this one. So this is actually the regional exposure of VTIAX, which is the equivalent Vanguard index fund that people use in their 3-fund portfolios with Vanguard, versus SWISX, which is the one that we're talking about with Charles Schwab. There's a bit of a difference between these two funds. VTIAX actually has more exposure to developing markets. And so you'll see here where it says Asia Emerging, 16.49% of VTIAX, the Vanguard Index Fund, has a lot higher of a weighting in Asia Emerging than SWISX, which has virtually nothing. And you'll see if you look at SWISX, the Charles Schwab Index Fund, it has almost no exposure to developing markets. It's mostly international stocks that are in developed markets. So developed markets, meaning Japan at 25.52%, Western Europe, and the United Kingdom. So the majority of the stocks in this fund are going to be in developed markets, and there's not going to be much emerging market exposure. So hopefully you understand that. For me, I'm okay with it. If you're not okay with it, you may want to add some emerging market exposure. So let's go back. So for the Schwab Bond Index Fund that we're going to use, we're going with SWAGX, which is the Schwab Aggregate Bond Index, expense ratio of 0.04%. The equivalent ETF is SCHZ, the Schwab Aggregate Bond ETF, which has an expense ratio of 0.04%. So also very low expense ratio for the aggregate bond ETF and index fund as well. And so the last thing we'll do is we'll kind of look at a pie chart to show you visually how this looks. And so this visualization is showing you what that moderately aggressive portfolio I talked about earlier looks like. And so that has 60% in domestic stocks, 20% international, and then 20% in bonds. So it's SWAGX, the bond, has 20%, SWISX, 20%, SWTSX, 60%. And now if we look at the ETF equivalent, we have SCHB with 60%, SCHF with 20%, and SCHZ with 20%. So that's it. I hope this helps you figure out how to create a 3-fund portfolio using Charles Schwab Index Funds or ETFs. So thanks everyone so much for watching, and please hit that like button if this video helped you out. I would really appreciate it, and watch another one of my videos on the end screen coming up right now.